I welcome Priti Patil, ma'am, to take forward the webinar from here. Ma'am is CBAM expert and technical expert. She has helped hundreds of clients in CBAM report generation, and she has expertise in CBAM in terms of calculating the tax. Over to you, ma'am. Ma'am will now explain to us and give us a masterclass on how to use the software and how to calculate CBAM tax, and she'll be giving her opinions through a presentation. Thank you so much, ma'am, for agreeing to join the webinar. Over to you.
Thank you, Shubham. Yeah, I welcome everyone in this webinar about CBAM cost calculation. I will walk you through the rules or formulas for calculating the CBAM cost, as well as I will demonstrate the CBAM calculator that we have uh, made available on our website and our CleanCarbon system. Yeah, let me share my screen. Yes. I hope everyone can see it. Yeah, so today's topic is cost calculation. So firstly, let's understand what is CBAM cost. Uh, so CBAM cost is applicable for all the CBAM goods imported in EU post 1st January 2026, which is called as definitive phase. So we had a transitional phase of CBAM at during that phase from 23 to 2025 end. We had that transitional phase, and during that we were supposed to just only submit the CBAM reports to EU. Importers were expected to upload those CBAM reports. But now from 1st January onwards, the CBAM tax is getting applicable along with the CBAM report. So CBAM report is still to be submitted, but whatever SEE value is calculated as part of that CBAM report, it is the CBAM tax will be charged based upon that SEE value. The EU importers must pay it on the CBAM declaration deadline, which is 30th September 2027 for year 2026. So whatever imports will are done from 1st January 2026 till 31st December 2026, the declaration and tax needs to be submitted not later than 30th September 2027. This CBAM cost is calculated based upon the product SE direct for steel and aluminum sectors, which is direct emissions of the product, and SE total for other sectors. So there are other sectors apart from steel and aluminum, like cement, fertilizers, etc. So for those sectors, it is like SE total is considered for calculating tax, but for steel and aluminum, SE direct will be used, which is a good thing for steel and aluminum manufacturers because it will impact it will reduce down the tax. The importers must purchase and surrender CBAM certificates equivalent to the embedded emissions in the imported goods. So, using the CBAM report, we are calculating how much emissions are embedded in the imported goods, and equivalent to that, importers need to surrender the CBAM certificates. So, cost of CBAM certificates will be the same as the cost is actually the CBAM cost for EU import. So purchase the certificates directly from National CBAM Authority of EU country where the importer is registered. So importer can purchase these certificates from the National CBAM Authority of the specific EU country. Importer must ensure that at least 50% of the required certificates are held in their CBAM account every quarter. So at the end of quarter, they need to calculate how much emissions they have bring inside EU because of the imports they have done throughout that quarter. And half of the certificates needs to be kept in held of their CBAM account. Importers must surrender CBAM certificates equal to embedded emissions at the time of CBAM declaration. So half amount need to be kept in the CBAM account throughout the year. It is kind of a guarantee that at the end of year you will be in position to pay the entire amount. So at the end of the that's allowed time, like 30th September, which is the deadline, that at that time importers need to surrender entire 100% of the certificates. Number of CBAM certificates will be adjusted based upon free allocation, free carbon allowance EU manufacturers receive. So whatever carbon emissions are done because of these products, not entire amount is charged as a CBAM tax. Some free carbon allowance is available for EU manufacturers. So this kind of tax is already in place in EU as part of EU ETS system. So EU manufacturers are already paying this carbon tax, but they are getting some free allowances on their embedded emissions. So same benefit EU is giving to the external manufacturers also. So their embedded emissions also will have that free carbon allowance benefit so that the tax is reduced. Now let's talk about the EU CBAM certificate price. So this certificate price is not fixed. It's not that you if like the through your imported shipment you are applicable for 10 CBAM certificates. So and the certificate means 10 into the certificate cost, and then this is the total amount. It's not that simple. So this price is fluctuating. It is market linked. So it is linked directly to EU ETS allowances, which is short form is EUA. So its market price, it is certificate price is linked with EUA market price under the EU emission trading system, which is EU ETS. For year 2026, CBAM certificates price will be calculated as a quarterly average price of this EUA. And Commission, EU Commission will calculate this quarterly average price in the first calendar week of the following quarter. So for first quarter of 2026, the price will be calculated at the end of first quarter, which is like on 31st March, first quarter will end. So next week, they will calculate the average quarterly price of this EUA, and they will make it available. They will publish it on their website on the first working day of the week after calculating. So in the first week of April, they will calculate the price, and the subsequent Monday, it will be available on the website. The price of CBAM certificates will be calculated in euro. So that price needs to be paid in euro. The certificates need to be buy from that website or that body, and you need to like importers need to pay it pay the cost in euros. So again, euro conversion amount is also applicable in that in cost. From January 1st, 2027, so this quarterly average formula is applicable for 2026. From 2026 27, it will be weekly average price. So they will calculate the average price on weekly basis, and that price will keep on fluctuating on weekly basis. Next important thing to understand before we actually see the formula for calculation and see how the calculations are done, we need to understand this term as free allocation adjustment. So CBAM benchmarks can be used to calculate free allocation adjustment applicable while calculating the CBAM cost. So there are benchmarks defined by EU Commission, and those are used for free allocation adjustment calculation. This free allocation adjustment is subtracted from the SE to get the taxable emission value. So this is a free emissions that are allowed. So bare minimum free emissions are allowed with every product. So that is subtracted, and then whatever is excess, that is charged. So in short, free allocation adjustment, if it is more, it is better for us. Precursor free allocation can also be added to the product free allocation if actual values are used. So since this is the more is better, we need to see how we get the bigger number as this free allocation adjustment, and there is a way to get it. The formula is defined in such a way that your product's benchmark plus your whatever is embedded free allocation coming from your precursor is also added to your total free allocations. But that is only available if you have the actual values of your product and precursors. It's not allowed, like formula for calculating with default values does not allow this. Pre-allocation adjustment value depends upon CBAM benchmark of product and precursor. So since like we are considering both product and precursors benchmarks, free allocation adjustment will vary based upon those benchmarks. So, and benchmarks differ for different CN codes, means different products. They are different for actual versus default values. So if you are using actual values, actual SE values, the benchmarks are different. For default values, the benchmarks are different. Different benchmarks are defined for the different production years. There are two periods they have defined. So for 2026 and 27, for these two years, there is a different benchmark. For 28 and 30, 28, 29, 30, there is a different set of benchmarks. Then one more important thing is like production routes. So benchmarks are different for different production routes. For example, we have primary and secondary aluminum. So primary aluminum has different benchmarks and secondary aluminum has different benchmarks. Then in case of steel, carbon steel based on BF-BOF or DRI-EAF or scrap-based EAF have different benchmarks. BF-BOF will have higher benchmarks, higher benefit of the free allocation. Scrap-based manufacturing will have lesser benchmarks, lesser benefit of free allocation. So now let's move to the actual formula. So this calculation is quite complicated, and there are many different cases, many different scenarios are to be considered while calculating. But I have like made it a simpler version of it so that we can discuss it, like everyone can understand it, who like even if you don't know much about CBAM, you can understand, you will get the fair idea about the calculation. So first, let's say this first line of calculation, like CBAM cost is equal to number of certificates to be surrendered into average EUA price. So once you get the number of certificates required to be surrendered for the particular shipment or for your annual imports, that number into EU average price is your actual CBAM cost. But how to calculate this number of certificates? So number of certificates is equal to your SE direct for that product. It is like we are calculating for a particular product. It's not for like if your shipment or if your import has 10 products, it's not total of that 10 products. It is for the specific product in that shipment. So for that product, if we are calculating number of certificates, what you need is your SE direct for that product minus this SEFA. SEFA is nothing but that free allocation adjustment, specific embedded free allocation. That is the long form of that SEFA. Specific embedded free allocation. So free allocation adjustment is subtracted from your SE direct. Again, your carbon tax paid, that is also subtracted from your from these two, and then whatever is remaining, that is multiplied by the quantity imported. So per ton, how much embedded emissions you are bringing in into quantity imported. Now, how to calculate this SEFA? This SE direct we have already with our CBAM report. Carbon tax paid is 0 in India, so this amount is 0 for now. And you have the quantity imported, but this figure is not known yet, SEFA. So how to calculate this SEFA? So here is the formula for SEFA. I have listed it here also for better look. So SEFA is like this. See this top formula, SEFA GY. So how to read this? It is a SEFA for this good G for year Y. So everything is based upon Y. Year is very important. The year is reporting period. For us right now, it is 2026 because the benchmarks, default values, and these other factors are defined for those are year specific. Whatever benefit of free allocations that manufacturers or importers are getting are specific to that year. Every year, those are getting those will be reduced down. The default values, default emission values will be increased year by year. So 2026, you will have 10% markup on the base default value. In 27, it is plus 10, like 20%, and so on. It is going to increase. So if you are not calculating your emission values, actual emission values, every year you are going to pay 10% more than the even if your import remains the same. Similarly, benchmark values are getting reduced every year. So your benefit of free allocations will be getting reduced year by year, and at in 2030 it will be 0. So there will be 0. This amount will be 0 in 2030. Right now, we have this like for 2026, we have these benchmarks available. So here is very important while calculating these specific embedded emission, embedded free allocation. So specific embedded free allocation SEFA for good G is equal to SFA, specific free allocation for process, or you can say for product. For that particular product, you have to calculate for a product that you are importing, plus this is SEFA for precursor. So as I said earlier, that we can get better benefit if we are calculating actual values. So we can have product pre-allocation adjustment plus its precursors pre-allocation adjustment. But precursors is not entire amount you actually get the benefit of. You get as based upon the mass ratio, like whatever precursor mass. So for example, if you are for 1 ton of production, you are using 1.3 tons of precursor, then 1.3 into precursor SEFA. That is what you get the benefit of free allocation. So this is products and this is precursors. Both are added to get the final total specific embedded free allocation. Now, how to calculate this products free allocation? So this is the formula. Products free allocation is equal to CBAM factor into CSCF, and this is cross-sectoral CBAM factor, and into benchmark. So what is this CBAM factor? CBAM factor is a factor like this for this year, it is 97.5% for 2026. Next year, it will be reduced down by 2.5%, I guess. So every year it will get reduced. So bigger the number, better the advantage of reallocation. But this number is getting reduced every year. So for this year, it is 97.5%. CSCF cross sectoral CBAM factor is the factor which is variable. EU Commission calculates it based upon the total imports. So they don't want that uh, like they want to cap the total amount of import and the benefit that they are giving for the import. So based upon how much total import is, that they can reduce this number. Right now it is 1, so no reduction of that. This is complete, like whatever benefit of CBAM factor we are getting, it's complete for now. But over the period they can reduce this, and that time the total free allocation will reduce accordingly. And then next is benchmark. So benchmark, again, there are two types of benchmark. One is for the actual values, another is for the default values. So actual values benchmark is applicable when you are using the actual values, calculated values, verified values. And if you don't have the actual calculated values, then you can use the default values benchmarks. Now, how to calculate this CEFA for precursor? So again, this is a kind of a recursion. So for this CEFA also, this is the same formula. So while calculating, for calculating products free allocation, you need to calculate products free allocation for the product using this formula. Similarly, you need to calculate this CEFA for precursor also, and then multiplied by mass ratio, you can add it to the product's CEFA. That will give you the total CEFA. It will be more clear when we see the actual example. So let me quickly recap this total calculation because this is kind of complex thing. So let me explain it once again to be more clear. So first, now I started from CBAM cost. Now let's start from the first point, from where it starts. So first, you have to calculate precursor CEFA. For precursor CEFA, you need CBAM factor CSCF into precursors benchmark. So that will give you these two are the kind of constant for this year's calculation. So for this year, it will be 0.975. 0.975 into precursors benchmark will give you precursor CEFA. Then you have a mass ratio of 1.03 for precursor usage. So precursors CEFA into 1.03. That will be give you this particular phrase, this particular equation. Now, if you have multiple precursors, then you will repeat this process for other precursors also. You will calculate the other precursors CEFA also and multiply it by their mass ratio and get the sum of all those. So as many, like if you have 5 precursors, you can calculate every precursor CEFA into their own mass ratio and sum it together to get a complete precursors free allocation total adjustment. Plus, you need to add the product CEFA. Again, for product CEFA, you will follow the same rule. You will calculate the products benchmark by 0.975 and total of this product CEFA plus total of all the precursors SEFA gives you total specific embedded free allocation for that product. Then you will use the SE direct from your CBAM report for that particular product. SE direct minus whatever number you have calculated here, minus 0 into whatever quantity you have imported. So if you have imported 10 tons of this product, so multiplied it by 10. That will give you the total of number of certificates to be surrendered at the end of the year. Okay. So to surrender those certificates, you need to purchase those from the EU site. So for purchasing, this will be the rate of this will be the price of certificate. EU average price, quarterly average price that will be available like in April. We will get this price for the first quarter of the 2026 year. So number of certificates multiplied by EU average price, that will be your final cost for that particular product's shipment. Now let's see it by example to make it more clear. This is a big table, so I hope everyone can see it. So this is the hypothetical example. This is a one product of iron and steel category with this CN code of 73269094. This is iron and steel category product. It has it uses this precursor MS flat sheet. It's of crude steel type. It's a crude steel with this CN code 72071111. So this product is using this precursor. This is the precursor mass ratio. So for 1 ton of product, they are using 1.013 tons of precursor. Here you can see share of default values is false. It's 100% actual values. So both the SE values are actual values. Means precursors values are also coming from precursors actual verified CBAM report. So they have received it from their suppliers. It is 2.937. It's not actually 2.937. It is like whatever value was there into 1.013. So based upon that, it is like precursors embedded emissions is 2.937. And you can see this particular product doesn't have any direct emission. They are using only a machine in electricity. No direct emissions is happening inside the factory. It's 0. Still see how they need to pay the tax. So entire the direct emission is coming from 2.937, which is from the precursor, and that is their total final SE. SE number is 2.937. This is their SE. Its country code is in India. The like for actuals, it will not impact much, but for if you are using default values, then country of origin makes no huge difference because the default values are different for different countries, and they are very punitive and very high for some countries like India. Then here this column is tells you SE type. As I told earlier, this is SE direct for the product 0, and it is coming from the actual SE calculation through the CBAM report. Similarly, for precursor, it is 2.937. It is also actual coming from the suppliers data, suppliers CBAM report. So both are actual. So since these are actual, we are using actual benchmarks. These are actual benchmark for these CN codes. For the CN code 7326 means iron and steel product, it is 0.303, and for the flat sheet, it is 0.188. So these low are the benchmarks. This much only is the free allocation. Our SE number is much higher than that actually. So these are the benchmarks, but these benchmarks are not completely free because the factor is applicable 0.975 factor of CBAM factor is applicable here. So resultant is this. So 3.03 becomes 0.295 actually. This much is the pre-allocation from the product, and 0.183 is the free allocation coming from the precursor. And 0.183 is getting multiplied by 1.013. So both are multiplied by their mass ratio, which becomes 0.186. So out of 0.188, only 0.186 is actually free allocation for the precursors embedded emissions. And for the product, out of 0.303, only 0.295 is the free allocation. And total of these two is 0.481. This is your SEPA. Okay, for this particular product, one portion is coming from the products free allocation. Another portion is coming from the precursors free allocation. Total of these two becomes 0.481, which is the product's final SEPA. Number of certificates. This is actual number of certificates calculation. SEA minus SEPA into minus carbon tax paid, which becomes 2.4. This is your SEA 2.937 minus 0.481 gets you 2.456 as the number of certificates applicable per ton. This is all per ton. Okay, so if you are bringing in 1 ton, you will be charged for 2.456 CBAM certificates. If your import is less than 1 ton, it will be lesser than 2 based upon whatever you have charged. So multiplied by quantity will happen. But let's suppose that it's 1 ton. So for 1 ton, you need to pay 198.039. So 198 euros. Here we have considered EU carbon price. Average carbon price of recent quarter was 80.65. This keeps on changing. So this is just for demonstration purpose. It's not that currently it is priced that way, but for demonstration, we have considered 80.65 as euros as the EU carbon average price. So for these 2.456 certificates, you will pay 198 euros. So this is how the tax cost is calculated. Now we have seen here, this is since it is actual, these two benchmarks were applicable. And now let's see how, if we use default values, how it impacts our cost, how it changes our cost. So this below table shows CBAM cost calculation in 3 different scenarios. First scenario is default values. So you have not got any CBAM report done. So if you don't have the CBAM report, EU Commission, EU authorities will charge you as per the default values. So how that default values are calculated, we can see it here. Then there is a next scenario, next column is for actual plus default values combination, where products actual SE is available, because you are, as a manufacturer, you are calculating your own SE values. You have your CBAM report, but you can't, you have not got any CBAM report and SE declarations from your supplier. You are forced to use the default values for the precursor. So this is the second scenario, which is mostly like currently all of many of our customer are in this scenario, but it is very like it's not a good scenario to be in. Best is you have all the actual values. So you have got your own product's SE data, as well as your supplier has also calculated their SE values. They have got it verified and they have shared those that data with you. That is the third scenario. So third column values are the for the third scenario. So here first is this product has CN code 73269094. Okay, all this it is for the same product. So if you are using default values, this is the default, and this product is, let's assume it's from India. So for India, for this particular CN code, the default SE direct value is 5.401. So that is getting applicable to you because you don't have the CBAM report, verified CBAM report. So 5.401 with actual and default combinations where you have the actual emissions values of your own like your product, but you are using the default values for the precursor. So in this scenario here, you have the actual emissions values coming from the uh, your factory, coming from the calculations CBAM report. But for the your precursor, you don't have these actual values. As I said earlier, that this is coming from the supplier and this is the actual value. If you don't get that, you have to use the default value here. And once you use that default value, it is something 4 point something. So your SC total SC direct immediately rises up to 4 instead of 2.9. So here that example is, it is 4.697 when you use combination of actual and default. And when you have the both values, actual values, you have 2.937. So you can see the SEs are so different in all these three scenarios. Then let's calculate the benchmark for these in all these scenarios. So will benchmark change? Since there is a default value in picture, the benchmark is also higher for default values, 1.629 and 1.667. These are the two values. For actual, it is just 0.491. Now one will feel that how come like having actual is good, but actual's benchmark is less and default's benchmark is higher. But it is like, since the default values are so punitive and so high, the benchmark are set accordingly. But you can see that how that doesn't help you. Your actual values still give you the better cost. Now, based upon these benchmarks, if we calculate the CEFA, actual free allocation, for default values, it comes to 1.588. For actual plus default scenario, it comes to 1.642. And for actual values, it is just 0.481. Okay, so CEFA is also again less in actual. It is higher, surprisingly, it is higher in actual plus default values. So this scenario is also not very helpful, actually. Now, based upon this CEFA, if we calculate number of certificates per ton, it comes to 3.815. Now, when you like calculate certain number of certificates per ton, you subtract this number from this. Okay, so this number is very high. This number is much lower, 2.9 actual number. So that's why you can see the difference here. Your number of certificates are like 3.8 in case of default values, 3.05 in case of actual values, and just 2.45 in when you have all actual values. So you have much better cost, better number of certificates, lesser number of certificates when you use actual values. And based upon these certificates, if we apply the EU average price, So cost for 1 ton of shipment using default values goes to 307.49 means 5. 307.5 euros. This is 246 euros, and with actual it is 198 euros. You can see 198 versus 307. That much difference it creates when you use default values versus when you use actual values. These graphs will show you in visual way, see how default value changes with default values, actual values, and actual plus default. So how all these parameters changes: SC direct, benchmarks, CEFA, and certificates. Everything reduces with actual values. Similarly, default value with like cost. This is final cost. You can see it is reducing with the actual values. So always it is better to have actual, your own actual values as well as your precursor's actual values. So you need to generate your CBAM report, as well as you need to make sure that your all your suppliers are uh, measuring their data and calculating their CBAM cost, SE numbers, generating their CBAM reports. Now, like we have seen all these calculations and all. You can see, like, even if I have simplified it for the webinar purpose, but still it looks very complex. And this was just for one product in one quarter. So we have to calculate for all the different products and for different quarters, and then for annual cost. So it's a quite complex task. So here definitely a tool will help you, and our CleanCarbon tool has all the abilities to generate, to store your data, to generate your CBAM report, to calculate the cost, and to present you various reports. And you can do analysis how your cost is changing. All those things are available through the tool. So for this webinar's purpose, I'm going to show you how we have developed a calculator, a simple calculator that can help you understand instantly how what is your cost based upon different scenarios. So let's see the demo of that CBAM tax calculator. So this is the CBAM tax calculator that we have. Here you can see the default value we have set here is 80.65. You can change it here. You can reduce it, increase it to see how it impacts your CBAM cost. Then you have product CN code you need to enter. Let's enter 732690. Articles of iron and steel. Next is production route. As I told, like benchmark are dependent on the production route. Benchmark are different for different production routes. So you need to select the production route. If your product is made using BFBF or scrap based or DRI based, or is it a high alloy, low alloy, what kind of product? Let's see. It's BFBF. Then country of origin is also important for default value identification. So let's give it India. And use the default values is on. It has fetched the default value for this particular CN code, which is 5.401. So this is the SE that will be applicable for your CBAM cost. Now enter the how much you want to import. For example, we want to import 20 tons. It is in tons. So in tons, 20 tons of this product. Let's calculate. So this product is iron or steel product. Its benchmark is 1.629. Its pre-allocation adjustment comes to 1.588 based upon the default values. And it for 20 tons, it is showing you 76.25 certificates are required to be surrendered. The cost becomes 6,149.9 euros. Quite high. So to understand it better, let's put the import quantity as 1 and click again. So now it gives us per ton cost. So for 1 ton, it will be 307.4 euros for this product. Now let's see how it changes with the this production route. So here we can see the benchmark was 1.629 and cost is 307. Now let's change the benchmark based upon like if my steel precursor or my whatever product I am making, it is based upon scrap EF based production route. You can see the benchmark is reduced and cost is increased. So, BF get better advantage of pre-allocation than the scrap-based production. Similarly, if you go for low alloy, it will be different. It is 0 for low alloy, scrap-based. 0 benefit. Entire amount is taxable. So it becomes 435 euros. So this way, you can change different values and see how the cost differs based upon that. Then you can change it here also. If like tomorrow it increases to 90, what happens in that case? Your cost increases this way. Again, we can try another thing is like if let's not use default values. Let's use the actual value. For example, suppose I have the actual emissions available with me. What happens in that case? So, actual emissions, benchmark is reduced, but see the cost is also reduced so much because the SE is reduced with actual. So with this calculator, you can like check for different, you can change the CN codes, you can check it for your different products, you can check the scenario when the cost increases, decreases, you can check the scenario when the different production routes come into picture, default values versus actual values, or even if you want to for your precursor also you can check it here. So you can directly enter precursor CN code here and you can check if it is BF based precursor or scrap based precursor and I purchase it from India, how much will be the cost, and if I purchase it from some other country, how much is the cost. That kind of things you can check it here and it will instantly give you the cost. And even like for 1 ton you can calculate it here, or you can enter any number of tons whatever you want to purchase and it will give you the total cost. So yeah, so this is just a cost, but with our product CleanCarbon tool, this calculator is available on our website CleanCarbon AI, as well as it is integrated in our CleanCarbon application where you can enter your CBAM data, you can generate your CBAM report, and you can get these cost reports readily available to you. You don't have to go and calculate it. It will give you based upon your CBAM report, because the system has all your data. So based upon that, it calculates and it will give you the actual cost, whatever will be applicable, or actual number of certificates applicable to that particular number of tons. So, and all the like its dashboard and analytical data is available for you to see with the tool. I think that's it for today's webinar. If you have any questions, we can take a few.
Thank you so much, ma'am.
Yeah.
You simplified and you also gave us the simplest version of how we can actually calculate the tax. So
Yeah.
as ma'am was saying, the CBAM tax calculator is live on our website in the resource section. So you could just fill in the input as explained by Priti ma'am, and you will get the tax report as per your CN code. But going ahead, if anybody has any question or any remark, please feel free to raise your hand or write it in the chat box and we'll take it up. I think we have one question, ma'am. If you can see, is by Mahesh Kumar Agarwal, sir. Is it visible to you, ma'am?
Yes,
Okay.
50% of CBAM compliance and certificates there to for each quarter by way of CBAM certificates, meaning that advance payment of CBAM liability. It's not payment, but it's guarantee. So you need to maintain that balance in the CBAM account as a guarantee, and you can make use of it at the end of the declaration period.
Perfect. I think, do we have any questions from anybody or any remark? If you want your tax also to be calculated, anyone, you can just let us know and we'll send you a report also on the basis of inputs needed to calculate the tax. Application of clean carbon. Can you please put your question, Harinder sir?
We have a CleanCarbon tool, and it's a CleanCarbon
For
system.
verification. Okay, so I'll take that question. So
Mm.
the European Union Commission has not published the verifiers, the list of verifiers so far. They will do it soon, but we can help with the verification process with our channel partners and in our network. So that is not to worry. Also, we maintain all the records and all the audit trails, as ma'am explained, which are needed to verify the conclusion as to why did we reach certain amount of emissions or carbon tax. So we can prove our final outcome, and that will be used in the verification process. Harinder sir is asking something related to clean carbon tool also. I am not getting the question. Sir, can you please be specific with the question? Like what do you want, if you want to know something about clean carbon tool or something? Okay, so I guess that you want to know about the clean carbon tool. So we help in end-to-end CBAM reporting. We have our own tool, as ma'am explained, and we have a team also. We gather all the data, not just from the clients, but raw materials and the vendors' data also from the third party, and put it all on our software with the help of the team that we have in the backend, and then we calculate and generate the CBAM report. And there is one more question. Is this mandatory for SMEs who export below 50 ton per year? CBAM.
CBAM is mandatory for importers, and if importer is importing more than 50 tons, then it is applicable to the importer. So if you are if SME is exporting 50 tons or even 1 ton, it is applicable to them if their importer is under that CBAM bracket. So if the importer is importing more than 50 tons, they will ask you for the CBAM report, even if it is less than 1 ton. So
This
it
is
doesn't
because,
matter. Yeah.
yes, ma'am. This is because, as ma'am is saying, an importer could have multiple suppliers from India, and this rule is not applicable for exporters. Whether you export 1 ton, 10 ton, or 50 ton, you have to comply with CBAM if you fall under the six categories or either of the HSN code given by the CBAM. Also, there is one question by Ravi Yadavji. How do we accurately account for the embedded emissions of our precursors? So as I said, we keep all the data, all the audit trails of the precursors of as to how they got the data, how the emission numbers, and we maintain all the record from third party also on our software. So that is how we are sure, and then we account for their data also. We have all the evidence to reach certain number of conclusion in terms of emission. This last question is there any carbon price already paid in our home country clearly documented for deduction? Ma'am, would you like to take that question?
Yes, in India, we don't have the direct carbon price yet. So we will not have any benefit of the price paid in the home country yet. And if any country has it, like even if if you are purchasing any precursor, which is a CBAM good from the other countries, and in that country, if it is applicable, then that benefit can be availed, but with all the documentation, like how certificate of payment, how much was paid, and like all the relevant documentation is required, and then you can take benefit of that. But in India, we don't have any tax right now.
So currently we are developing CCTS, and if it is developed in full-fledged manner as per BE, Bureau of Energy Efficiency, then maybe we could avail that. But as of now, there is no such thing. There's one more question by Ms. Poonam. Which is the best method recommended for SEE calculation, standard or mass balance or CEMS? Ma'am.
Yeah. So it actually it's not that way. Means it is not something recommended. It is like in different scenarios, different method is to be used. So mass balance is generally used in the core steel manufacturing cases, where there are no other precursors. Precursors means the CBAM material. All the raw materials are from non-CBAM category. In that case, it's carbon input versus carbon output, and the carbon remained in the product, that is taken into account using the mass balance method. In all the other cases, mostly it is the standard method, emission factor based method is used.
Thank you, ma'am. This is the last question that we are going to take. If you have any more question, please write to us or send us on our email, shubham@cleancarbon.ai, and any more of our colleagues also, and we'll reply with the queries that you have. The last question is, can you explain a bit about scope 2 emissions and if that is required for steel and iron sector, ma'am?
Yeah. So scope 2 emissions are indirect emissions that are to be reported as part of CBAM report. So we still need to report the carbon indirect emissions coming from your electricity consumption, but those are not taken into account while calculating the cost. So those will not affect the cost, but they need to be reported, and it is only that exemption is only for steel and aluminum sectors, not for the others. For others, that will be considered for cost calculation as well.
Thank you, ma'am. So I'm putting my number in the chat box. If anybody has any query or remark, you can please either text or call me on that number and we will clarify all your doubts. Thank you so much, everyone, for joining this very fruitful webinar on CBAM tax calculation. And please don't forget to use our CBAM tax calculator. It's absolutely free on our website. You can just go, give in some basic details about your export, and then you can know what will be the tax that you will need to pay after April this year, because from April, I think, as ma'am said, they are going to publish the first tax rate, April 7th, if I'm not wrong. And if you have any queries, let us know. We'll be more than happy to clarify all the questions. Thank you, everyone. Thank you, Priti ma'am, for your time and lucid explanation. It's, as you said, very, very complicated, very technical in nature, but you have simplified it to the extent possible. And also you have given us a free calculator where all of us can go and calculate our tax. Thank you, ma'am.
Thank you.
Thank you.